Brent crude, which is the signature product of Nigeria's oil and gas industry, is now threatening to sell under $50, a situation which could send shockwaves through the system and ultimately disrupt budget benchmarks and planning. But while Nigerian economies continue to scratch their heads, while digesting this, a bit of good news filtered through in the last 24 hours, with the Nigeria Bureau of Statistics saying that the country's economy grew at 2.55% in the last quarter of 2019 and at 2.27% for the entire year, surpassing the IMF forecast of 2.1%. Well, to make sense of all of that, we're now being joined by Tilewa Adebajo, economist, investment banker, corporate finance expert, and public affairs analyst. Tilewa Adebajo, good to have you again.
Good morning. Thank you for joining us.
Yes, but let's start with this threat of coronavirus and an incident in a part of China shaking up the entire world economically. Stocks are falling everywhere. Only President Trump appears to be jubilating. He says the stock market is looking good to him. But to the rest of the world, the stock market is not looking good. And it's not good news for Nigerians that oil prices are going down. And OPEC is also threatening to cut production caps further. What's your take on all of this? And what should Nigeria do? Because if oil prices go below $50, we'll be in very serious trouble indeed.
It's interesting, but unfortunately, this epidemic that started in China has become a pandemic. And I think the global proportions of this are beginning to manifest into the economic indicators as we've seen. China, of course, its powerful manufacturing base is beginning to affect the world because production, of course, is shut down in China. And the scare really is the fact that because of the shutdown or the slowdown in China, it can begin to export a recession into the rest of the developing economies who are more vulnerable. As far as Nigeria is concerned, it's a serious situation because oil is now trading at a lower benchmark than what we budgeted for. We budgeted for oil at $57 at a barrel, and oil is now trading, at least Brent, is trading out at $55. So basically, it's going to worsen our deficit situation. As we all know, we have a challenge with revenue mobilization in Nigeria. We have a deficit right now of maybe cumulative about close to 3.5 trillion naira, and we're spending 60% of our revenues servicing debt. So if we do not have that revenue from oil coming through, our debt service revenue profile might go to as high as 70%, which doesn't leave much for anything that is reasonable for investments or capital expenditure. Take, for instance, Nigeria has about a debt-to-GDP ratio of about 30% and spends about 60 to 65% of its revenues to service debt. The United States, on the other hand, has a debt-to-GDP ratio of 101%, but the U.S. government spends only 8% of its revenues to service debt. So that's a huge disparity. So the debt-to-GDP ratio is really not an issue. So if you have declining oil prices, then it's just going to worsen the revenue mobilization situation. And of course, you already have some fiscal challenges with the deficit. So it's the oil price coming down is not a very positive shock for Nigeria.
It's quite a grim picture, and we often talk here about diversifying our economy, which we have so far failed to do in any meaningful way. But even look at what has happened with China. Now China has sneezed and the whole world has caught a cold. Nigeria, we've put all our eggs apparently in the China basket. Where does this leave us going forward? What lessons should we learn with regards to globalization going forward?
Well, with everything else, you know, there's what you call risk management. And you really need to have contingency plans in place to be able to manage this risk. And I think we all know that anything could have happened with the oil prices. At a point in time, we thought the tensions between Iran and the United States was going to lead to another war and oil prices will go up, and that might be in our favor. But all of a sudden, something that we did not plan, like this coronavirus, has come up to become a pandemic that is going to begin to threaten oil prices because demand for oil has gone down, and that will invariably threaten our revenues. So I think what is important is really to be able to put in those buffers in place to be able to manage your economy and probably manage these shocks. Because, we live in a global economy. Sometimes it's in our favor, sometimes it's not in our favor. And we need to be able to manage both the up and downside of
So we should be prepared for uncertainties.
Yes, definitely.
External shocks.
Yeah, exactly.
Absolutely. Because, if oil prices could fall by 4% yesterday, we also have to look at the sustainability of the energy sector as a whole going forward globally. 50%, oil and gas companies on the S&P 500 have dropped by 50% in the past 5 years. And that's mainly due to instability in the oil sector. How does that directly relate to Nigeria, and how do we best address this problem?
Well, the commodity you talked about, of course, as you look at the prices of this, is about sustainability. You find...
Bless you.
Bless you.
Sorry about that. Oil is becoming a resource. You've seen the shift in electric cars, and most of the European countries have said by in another 10, 15 years, they're going to shift all their production from fossil-based fuels like oil into sustainable energy like electricity. So the demand, oil is becoming a resource that basically people are beginning to shift away from into more of the renewables. So you can begin to see the value of oil prices dropping. It's quite interesting you've mentioned how those companies have lost value. One of the biggest sovereign wealth funds in the world, which is the one in Norway, which is also a major oil producing and gas country, has asked its fund, which is the largest sovereign wealth fund in the world, to begin to divest from oil and gas companies and beginning to invest more into sustainables. So because of that challenge and that drive to renewable energy also, there's also increasing pressure on that. And even in Nigeria also, the fact that we've not been able to exploit our resources, for instance, Nigeria is more gas than oil. And I think going forward, Nigeria needs to concentrate more on the gas production than oil, because oil clearly is a declining resource.
Well, any shock at all, the market will respond to it naturally, whether it's political, economic, or a natural disaster. But, the fear is about how the stock market across the world, East and West, has been responding. But BNB Paribas, I referred to this, I think 2 days ago or so, yesterday, has done a report saying that we don't need to panic. That in the short term, certain industries will be affected. Manufacturing, travel and tourism, now the oil sector. But that in the short term, if there is recovery in China, or even now, there are certain sectors, that investors can go to in the stock markets across the world. Maybe telecoms, because people will still use phones. Maybe financial tech, fintech, and some other areas. Do you think that investors really need to panic, or they should just try to ride the storm and all will be well at the end of the day?
Well, there are various classes of investors, and you find that the key investors that you really need to look at are basically the ones that manage the pension funds, which are the long-term investors. But you find out that most of the investors that drive the market, or you see the volatilities you're seeing, are the ones who have short-term positions in the markets. So those are more of the speculators. So those speculators, they react to those sort of shocks that you're seeing. For instance, now, they've taken a position in probably certain stocks, and they're beginning to see a particular shock. So basically what they're doing is they're beginning to move out of those positions very quickly to be able to protect their trades. So it is those speculators you see that drive the market initially. Then eventually we begin to see the stability and the long-term players eventually begin to take off. So these are things, as you said, we need to expect, but eventually there's some correction that will happen. So you see, like you mentioned, the 4% drop in oil prices will be triggered by the fact that some traders might have some sort of option in the future on certain trades, and they begin to need to correct their trading positions to adjust. So you'll see that over the next month or two, and eventually that correction will be made, and those adjustments will be, and eventually the risks or those sort of uncertainties will have now been built into the market going forward. So within a month or so, we should see some stability within the oil prices, and people would have adjusted their positions.
It is that, a factor of whether or not the coronavirus prices drops or stabilizes?
Well, I think...
What if it gets worse?
Well, I think people are preparing for the worst. People always prepare for the worst because this obviously has become a pandemic. Korea, we begin to see more cases in Europe. We haven't seen much more in the United States or in South America or even in Africa. We'll see how it goes. But I think people have already built in this whole pandemic issue into the market prices, and that's the adjustments you're seeing with a lot of volatility. But things should settle down invariably.
We certainly hope so. Now, I want to take your thoughts on the figures released by the Nigerian Bureau of Statistics, the last GDP figures, the last quarter of 2019 and the full year. So Nigeria grew by 2.55% in the last quarter of 2019 and 2.27% for the full year, surpassing IMF's forecast of 2.1%. Should we be excited by that? I mean, I am. I'm always looking for good news. I'm kind of desperate for good news.
Where there's too much bad news.
Yes. I mean, it's overwhelming.
Yes. Unfortunately, I think the last time we were here, I think you especially mentioned whether we were going to go into a recession.
Yes.
And you were a bit concerned about that. What is important is that the trajectory on growth is positive and it's in the right direction. But I think, as we mentioned a while ago, and I think I don't want to dwell too much on this, is the fact that we have a population of 180 million people. We cannot be growing our economy at 2.5%. And our population growth is about 3.5%.
2.6?
3.5.
3.5.
Really? Sure?
Yes.
Our population, 2.6.
No, 3.5% growth is our population. And if you're growing your economy at 2.5% and your economy is growing at 3.5%, I think that's why you account for 100 million people in poverty, because your economy is not growing fast enough to sustain its population. So I think what we need to do is, yes, we're happy that we're not, the growth trajectory is not negative. But I think what the government has done with the Finance Act and the Deep Offshore Basin Act and those sort of areas to try to create the stimulus, I think what is important is to be able to find out how we're going to look at the structural reforms we need to create in this economy for growth.
On that note, Tilewa, we need to take a short break now. When we return, our conversation with Tilewa Adebajo, economist and investment banker, will continue.
Welcome back to the morning show here on Arise News. Tilewa Adebajo, economist, investment banker, corporate finance expert, and also public affairs analyst, is still here with us on the program. And before we went on a break, Tundu had asked you about the IMF's wrong projections on Nigeria and how actually we have grown at 2.55%. But yes, it is still below our population growth, which means that we don't really have that much real growth. And of course, this is also below the government's projections that we had in the economic recovery and growth plan, etc. Would you say that stable oil prices in 2019 had much of a role to play in this, or would you say that we really tapped into some sort of diversification of our economy that led to this change in projections?
Well, I think
reality?
When you take a look at it, I think the fourth quarter there was a bit of a rally. And I think the sort of stability you saw in the last quarter of the year, I think helped in terms of the confidence that people began to see in the economy with the passing of the budget on time. And taking a look at, post-elections, I think with the election results announced, there was a bounce and confidence was restored that, okay, a new government was in, and people are more optimistic, because if you take a look at the PMIs have actually improved significantly, and I think business confidence started to grow post-election, knowing that there was a perfect change of government. And at least the policies were not going to change significantly. So I think we can account for that in terms of business confidence to see those results. Again, like I said, it's important that we maintain that positive trajectory so that we do not slip. And let's see what these reforms will do to be able to stimulate growth and begin to see what we can do this year. But again, as you've said, the IMF Article 4 visit was recently concluded. And the outcome of that visit was that because of the economic headwinds globally, they've adjusted our growth figures this year to 2%. So again, we still have that challenge, and we again have to strive to overcome.
Well, let's talk about something else. I mean, we need you to help us and our viewers make sense of this, which is this controversy about CBN's latest so-called directive on domiciliary accounts. The CBN is alleging that, there's been some misrepresentation, that the CBN has not forbidden or outlawed, foreign currency deposits into domiciliary accounts. But what it has said is that if you do electronic transfers into DOM accounts, then you take out the money through electronic transfers. If you deposit cash, then you can only withdraw, using the cash avenue. What's the meaning of all of this? Even if with this clarification by the central bank, some people are still saying this doesn't quite make sense. Can you help us make a sense out of it? What does it really mean?
Well, what it means is, basically the challenge that we've always had with our currency is the informal market, which we call the black market or the parallel markets. So most people buy their currencies from the parallel markets, and then they now take it to their banks and deposit it in their domiciliary accounts. And sometimes they want to transfer it abroad, and sometimes they want to use it locally, because basically you're buying foreign currency to be able to use abroad, and you can only carry a certain amount of money when you're traveling. And you have to be very careful to make sure you're not carrying more than $10,000 in cash, so that not to get into trouble. So most people want to put this money into their bank account, and I think they're allowed to transfer maybe $10,000 a week. That was the rules. But of course, what some people were doing was that they were now beginning to use it as a business, put money into their account, use internet banking to change it to Naira, and, begin to do all kinds of things on that. So there came some sort of abuse of the system, which led to them coming back to review, to be able to ensure that, there is traceability within channels. So if you want to use a particular channel, be consistent with that channel. But I think what is important also is to be able to restore confidence in the domiciliary accounts, because at a point in time, 30% of our deposits, 30% of our bank deposits are in foreign currency. I think that figure has now dropped to about 25% or 20%. So it's a significant amount of money that is being held within these domiciliary accounts. And I think from time to time, because of the abuse, they're trying to maybe make some small changes, but unfortunately, maybe the communication is lost, and people get confused all over again and say, well, they've stopped us from doing this. But certainly that is not the case. And I think it's important that the central bank begin to talk more about this, because it is important for us to have confidence in. Nigerians used to have a lot of confidence in their DOM accounts. And I think we need to begin to sustain this confidence, because it's a significant amount of funds that help sustain the stability of the currency against the Naira.
But where does this leave innocent Nigerians, who buy Forex, keep, maybe just to pay school fees?
Yes.
And then eventually, transfer these monies to these universities abroad where the children go to.
Yeah.
Now, that shuts that innocent group out.
No, it doesn't shut them out. It's still there. You can still do your transfers, but all you're saying is the withdrawals.
So you go and withdraw your cash.
Electronic to electronic, or withdraw to
No. If you're allowed, what happens is that if you have, what they're now saying is that if you put your money into the DOM account and your money is there, then you can transfer the money out through your Form A. For those doing school fees, you can transfer, you can continue to build up your, everybody builds up their money bit by bit, yeah. And then when the time comes, you do the transfer. So all they're saying is that fill out a Form A and do your transfers. Is that simple as that. So that hasn't stopped. They haven't stopped that. But what they're saying is when it comes to withdrawals, which is really where the key, that is what the speculators are doing. So don't forget that some people are playing the system with trying to do foreign exchange trading with the banks. So they put in money, they'll keep it there, and then they'll withdraw, or they'll put it through one channel and withdraw it by cash. So they're just trying to make sure that you're consistent. But in terms of your normal transactions, your Form A transactions, you're traveling abroad, you want to get your traveling allowances, all those things are still very much available. And I think what the central bank needs to do is to do more of an enlightenment campaign nothing has changed for those doing their normal day-to-day businesses.
Oh, that's comforting. What's your assessment so far of this year's Finance Act? Because we're told it's going to be a yearly thing now with each budget.
Well, it's too early to say. And I think that when you're taking a look at revenue mobilization, trying to adjust something, so let's give it some time, let's give it 6 to 9 months and let's begin to see what the effect is. I think it's something that is positive. They're trying to use it to raise money. And I think what should happen is let's see how the implementation goes. And maybe in another 6 to 9 months, we can begin to talk about this and begin to see what impact it has. But right now, I think it's too early to see the impact. But it's a positive development.
But do you think there may be any adverse effects or worrying effects that it may have that we can see from now and project?
My only issue was the increase in VAT. I didn't think that should have happened, especially when the economy is in a recession. How that happens when you tax consumption, when you are growing, then obviously we don't know where the stimulus will come from. So that, for me, is about the only chink that I see in the Finance Act. But let's see how it pans out. Let's see the impact on VAT collections. If we actually see an increase, or it stabilizes, or it works out. So we can talk about that in another 6 to 9 months.
Well, I mean, you referred to the IMF Article 4 on Nigeria recently, just a few minutes ago. IMF saying economic growth in Nigeria is not likely to be more than 2% in 2020. And the reasons given, global shocks and distortions, local distortions, fragility, policies that need to be refocused. What are those things that you think we need to do specifically, to make sure that, again, we beat the IMF prediction?
Well,
we have just 1 minute to go.
I think it's not beating the IMF prediction by 0.17% is really not what the issue is. Yeah. What we need to do as Nigerians is that we need to begin to relook at how we're going to restructure our economy, make it a structural reforms that can grow this economy at 5 to 6%. Then we're talking,
or even more, or double digits.
Yeah. So if that's what we really need to do. If we're not doing that, then it's not about beating IMF estimates.
Well, because in 2019, MBS says we did much better than IMF predicted. Anyway, thank you very much, Tilewa Adebajo.
Thank you.
Always a delight to have you here.